Hey everybody, it's Brett with your weekly recap here, and wanted to get this out to you as soon as we could. Been a pretty quiet weekend, and so not a lot of fireworks here over this past weekend. But let's take a look at where things are, and I'm going to just share some news here so we can unpack some of what is going on in the markets here. And of course, still the FTX is center and center screen for everybody. I'll go ahead and turn off my camera. Just wanted to say hello, and I'll go ahead and turn that off so you can see full screen. So, we'll kind of take this. We'll follow the path here from FTX into some other of the contagion that may be likely to be happening. Let's see. I'm sorry. The camera. Yeah, camera should be off. Okay. So with that, let's talk about this. FTX founder Sam Bankman-Fried. I'm not going to go over this. There's so much news out there, and we have accounted for the timeline in past videos, but Sam is still out there saying he can't account for billions of dollars that it was sent to Alameda. It's pretty clear they were misappropriating client funds, and with the hope of propping up the Alameda trading firm, and were essentially degenerate long on a lot of the coins, and they've even said that they really weren't practicing a lot of um, sound investment management practices. They were just basically buying for the eventual rebound, which didn't happen. So anyway, billions of dollars. Sam's in real hot water. He's trying to paint the picture that, oh gee, he made a mistake, and that he didn't know that the funds were misappropriated. And I don't think anyone really believes that. So we'll kind of take a look at the markets here in a minute here. But so FTX founder vaguely aware of lending customer funds to a hedge fund. Sam's he's got himself in a real tight spot here, and we'll see how it plays out. I think a lot of that's been priced in. However, this news with the Genesis, also, there's reports of it's down 1.8 billion that Genesis is in trouble with. And the big question I have is how it affects Gemini. And so, wait a minute, jumped around a little bit here. So we've got the Winklevoss exchanges are owed 900 million. So they are trying to recover funds after FTX failure plunged market into turmoil. That's a pretty big number. And this is what I wanted to highlight. Gemini's bid to recover the funds underscores how the crypto lending markets, where investors lend out their coins in exchange for a high rate of return, sits at the center of the industry's credit crunch. And then down here below, Gemini isn't scrambling to raise funds, but Gemini, it's not really clear to me how closely they're tied. It has now formed a creditors committee to regroup funds from Genesis, and here's the important part, and its parent, DCG, Digital Currency Group, which is a major player, which also kind of owns, I believe, Coinbase and some of the other ones. So here's the issue here, that if DCG files on behalf of Genesis or both of them for bankruptcy protection, then that's bad for Gemini and the Winklevi. And it's funny how that rhymes, Gemini and the Winklevoss twins. And because if they don't get their 900 billion back, so 900 million back, that's a big number to eat. And so, if there is that potential for protection, and they do it through, they being Genesis and Digital Currency Group, then under the law, then that would be a smart business decision. So I would, I'm a little concerned about Gemini. So that could that be the other shoe to drop? We don't know. I was digging around a little bit, and Genesis total loans to 1.8 billion. So there's other people that want their money back and were affected by this. So it's likely this will go into deep bankruptcy protection, and that's bad for the people that are holding the bag, essentially Gemini, the Winklevi, and anyone else. And I'll just leave here, and then we'll dive into the charts. I had to dig deep into some Reddit accounts here, and from chat here. And so basically what I found is that, well, this is a prediction. It's not meaning it's going to happen, but he basically says CEX are going to die. That centralized exchanges, they can't stay liquid off of the fees alone. It's not enough. When the volume goes down, when coins fall to pieces, aside from degen day traders, they really can't generate the trading fees they're used to. And I'm paraphrasing here. And so they're predicting that in the US that will on-ramp Bitcoin, Ethereum on things like Fidelity, JP Morgan, then going to the decentralized exchanges, sort of like Uniswap, etc., the food swaps, we'll just call them that, so Sushi Swap and Pancake Swap and all these things, the decentral exchanges to buy altcoins, and then platforms like these to generate yield on that. So whether or not that happens remains to be seen. But that basically Gemini had made it clear that you are lending out your crypto to be leveraged against your crypto with the use of Genesis. So they had some kind of a, arm's length transaction or Chinese wall, and not really clear how closely they're tied. They do appear to be different companies, so that's fine. But this person's saying if Gemini survives, it's only temporary because the contagion is so deep with DCG, the parent company of many of these top companies, that if they were to go under, then that's when we'll start seeing the lower numbers I've been predicting and forecasting for Bitcoin, 12,500, 10,000, and maybe a hair below. We'll see. And then also Grayscale Bitcoin Trust. So, there's that. And then there's also the Mt. Gox Bitcoin being unlocked. So for those of you that haven't been following that, they've recovered a fairly large amount of Bitcoin from the Mt. Gox hack, number of years ago, back in 2014, 13, when it back in the day. And why is that dangerous? Well, there's all this Bitcoin now hitting the market that they may just dump it to drop price and take out what they can. So if any number of these things happen, certainly it's going to really hurt the markets and the confidence in the crypto markets. And so that's a bit of a concern. However, there was a bit of here's some counter argument, and these are not credible sources necessarily. I don't know who they are. I'm just sort of doing some digging into some ideas of that are, counterpoint. And this person's saying Gemini is making 100,000 a day off trading fees when it's slow, and they aren't even top 10. So I can't verify that, but that's pretty good money. That's in 10 days is $1 million. They could ostensibly survive a $900 million write-off. It wouldn't be fun, but there's that. So essentially, this goes further down a rabbit hole. So anyway, let's kind of dive into the charts here. So really quickly, the monthly chart, we did see this big bearish engulfing candle in November, a little bit, just a sliver of a bounce in December, but we're only 4 days in. No real reason that this should go higher. It's just if this is the bottom here, 16,500, which is a number I've been forecasting for since May 19th to be exact, and we've been hovering right around here. If it is the bottom, which I don't believe it is, these bearish engulfing candles, as you can see in these red boxes, tend to continue lower. Similarly, the bullish engulfing candles, as we've looked at in the past, and then these green boxes tend to continue higher. So as we see here, so no huge magic there or revelations that would surprise anybody. The only thing I would pull up is the monthly MACD, which is why I suggested we should get out back in November, and on this cross here in January, really pounding the table to get out of these markets. And people that will attest to that. And so similarly, this seems to be bottoming out, albeit slowly. And so I would say probably we're into mid 2023, if not August third quarter, before this starts to recover ahead of the halving, but there's no guarantee that it does. We are uncharted water here. So just jumping over to the weekly here, and I've got a few things to overlay and reveal here. So here we have my very scientific wild ass guess here on what I think will happen. And I've had this up for a week now. I think we'll push up here to this level of say 18,500 potentially, and it's this black line here, which is was support and is now going to act as resistance at 300 week moving average, which I believe will reject and will head lower into these lower levels. And so let me just turn this on here, which I have as an overlay. So these are some accumulation zones. And the other reason I think that we could even head up here to this 20,500 level. And the reason is this big magnet that's showing is where the volume is heaviest at this area. So basically the fixed range volume profile from the March 2020 drop here puts this highest level of volume right in this range here. And you can see we gravitated toward it back in here. It does tend to, it's also known as the VWAP, so it tends to be a magnet for price. And so all that being aside here, let me just hide this and hide that for a moment. Well, so this being kind of the distribution zone, if you are following the Wyckoff distribution patterns, and then here's some accumulation zones down here in the green, which I've drawn as likely areas to start dollar cost averaging. And so have just kind of created a nice Google Doc for how to dollar cost average in and allocate capital that maybe we can share with you. And by the way, if you like the content, be sure to hit the like button down below. It really helps the algorithms and get in front of more people. So if you're liking this content, please go ahead and hit that like button. No need to smash it or anything silly like that. Just click the like button and subscribe if you haven't already. And so what I'm proposing here is that if you hadn't already accumulated some Bitcoin up around here, which would have been fine, and certainly, you know, I do recommend emergency stop losses, but also to dollar cost average as things go lower in likely accumulation zones. So in this zone here, which is essentially between 14,000 and 18,000 rather, would be another area. I do like 14,000 level, and I believe that's our next support level for a number of reasons. And also then down into this 12,500 level, that would be the 100-month moving average. We jump back to the monthly here. That would be this green line, very likely support level. And the reason I like 14,000 is right in here. That was the high and the low of the following month in early 2020, and the very, very high of the June 2019. So that's a very important level there. And then down below that, again, we certainly could go down to the $10,000 level. So you can see I have that as accumulation zone 3. And I have alerts set at all these levels where I would be and will be dollar cost averaging in, with the intent of getting the lowest possible average price down in this region, because if you believe as I do that this will be the bottoming region here, if we were to pull up a regression band, we would see that we're already in the fire sale prices area. And incidentally, I've written a research report on this that shows this. It's called Blood in the Streets. It's an analysis, 15-page analysis and report on why I think, you know, we are bottoming, but may not have found the bottom just yet. And so we'll find a way to get that out to you probably in next week's video. So that you have it. So at any rate, that's where I would be accumulating $10,000 in that range, and also down to this 97.50 level, which again, as we've talked about, is the final CME gap that has yet to be filled. So if we wanted to just touch on that really quickly here, I'll go over to this list, and on this daily, we'll come back to the daily chart of Bitcoin, but I wanted to show you the CME here. Where is it? In here somewhere, and BTC, yeah, right there. So essentially, you see these circles here where the markets have gapped up. This is the futures. They have gaps, you know, over the weekends and over the trading hours where the exchanges are closed, unlike crypto. And so if you look all the way back here in the, where's this here, in July of 2020, last summer, we had the market gap up big at in this area here shortly after the COVID crash. Came up, nice cup and a handle pattern here, and broke up out of that handle and pushed higher. But really, I'm watching that CME gap. These have a way of coming back and filling at some point in the future, and there's various reasons for that we won't get into. But that's why I think this could be the bottom. If we do get down to the 10,000 range, certainly I think this CME gap will be filled. So right in around the 97.50 to 97.80 range. But it certainly may not, but that is an area of interest. So with that here, we can take a look at a few things here, Bitcoin, and you know, not a lot happening with Bitcoin here. This is a weekly, of course. And let me just jump over here to the daily. So this trend line here is one I'm watching. Previous resistance, broke up support all the way down here, launched up above, came down support. So it's a very important support level that in due time here, as I've forecasting, I think we'll see sort of the bottoming happen in December may not be the bottom, but that puts us down around 14,000 here, right around Christmas, if I were to guesstimate, and then could languish around in here. The big unknown is we have a big capitulation down in here, down to 12.5, 10,000 as I mentioned, and so we'll have to see about that. In terms of Ethereum here, let's pull up ETH and see what we're looking at there. I think this is kind of an interesting scenario, and I thought that we'd reject here. I don't know if we will or are doing that now. It does look a bit overbought using our proprietary indicators here that, again, you can find out more about at moonstream.io/success for Success Council, and that's really been our guiding light and our North Star throughout a lot of this in these markets, printing these red and green arrows. So when I see two red arrows and also overbought on this trend strength indicator, I think this comes lower. Even if we push up here a little bit higher, I think this does come back down. So sub 1,000 on Ethereum, I think it would be a good place to accumulate some of this, and then from there, my back up the truck buy zone for Ethereum. And lately I've heard some other people chiming in, some smart traders thinking the same, but I've been drawing this and talking about it for months now in this range here, this liquidity zone, accumulation zone between 500 and say 662, not exact, but let's say between 500 and 675. This is a buy zone with a question mark. I would then defer if we do get down in these areas, rather than buy just because it's down. I would be watching for, again, these indicators that we use, especially on a weekly, because they're so powerful on a weekly basis here. If I just zoom out, that has been very accurate in calling these tops here, but also the bottoms. Now, it's interesting that on a weekly basis, the week isn't over yet, but on a weekly basis, we have a green arrow, but it's not confirming with the trend strength indicator. That's how we read these. When we have the TSI going red up above that line and a green area, this is when we pull the trigger on our end. We also like to see the signal line go green and the bell signal. That is really our ideal scenario. So this green arrow here is not validated because the trend strength indicator is red. But it's interesting to note, it's just further proof. I think it does push higher for a little bit and then rolls over and goes lower. And so I'm happy to hear that. I'm in cash in my IRA. This is, I would be adding some if we see those signals go green right around sub 1,000. But I'm really hoping that we do see a bigger drop in the final capitulation move, and we can buy and accumulate some Ethereum down in here. Not saying it'll happen, but I'm holding some dry powder for that opportunity if it does. So Ethereum dominance here is also interesting because most of you are familiar with Bitcoin dominance. We'll compare that in a minute. But if we look back in time, all the way back to 2017, and it's funny they have this image of the dinosaurs here because ETH dominance, we really weren't talking about it until then. It was going down, 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 and then it turned, right? So it's really interesting. The chevron shape, we are holding in this upward trend for ETH dominance, this green highlighted area. I'll just zoom out for you guys so you can see that. And it does seem to be holding. I drew this a while ago, this sort of pattern. And so what this means is as money comes back into this markets, it's looking like at this point we'd see at least a short-term pump in favor of Ethereum. Really hasn't been beaten down as much as Bitcoin, and we can also see that in the Bitcoin dominance chart, which is sort of languishing down in this range. Now, it is interesting to also note that this is a wedge pattern, typically breaks to the downside, and so we could see money flowing out of Bitcoin and into altcoins, and that would include Ethereum, of course, but and some of the other alts potentially as well. But these things generally will break one way or the other, so we'll have to keep an eye on that, either up or down, and that's Bitcoin dominance. If we take a look at USDT dominance here, it's just sort of inching higher, but this is not clear on what we'll see. It's an inverse relationship to Bitcoin. So as this pushes higher, I guess I can draw another layer on this just to see. It's still in an uptrend, but we're seeing kind of breaking into a new lower trajectory there. So we want to watch that as well as DXY. And And so DXY is pulled back here, and I was just looking to make sure I was showing USDT dominance, and we'll look at USDT as its standalone here next. So again, inverse relationship, DXY is pulled back here, but it's looking like this could be a strong support level for it to bounce from, which would then coincide with another drop in crypto. So we want to watch out for that. And then just on to the USDT dominance, or sorry, USDT. Keeping an eye on this here. Just want to make sure we haven't seen any other drops. It's firmly at $1, so it's held its peg. That is good news. Although there is some speculation that Tether is not fully backed and a coordinated attack could do some damage. I don't know, and certainly that would be terrible for crypto. So as of now, we're not seeing any signs of that. All right, let's take a quick look at the total market cap here on crypto. And this is similarly to the Ethereum area. The reason I like this little check mark down here is if we do see another drop, let's say we have another shoe drop, which I think is entirely possible, whether it is Grayscale or it is something like digital currency group. If Genesis fails and causes contagion with Gemini, and or there is a digital currency group has more exposure than we know of, that could be a big capitulation event, really drive things down. So I have alerts set in the sub $600 billion level, with a couple hundred billion among friends. So this is a value area that I would be looking to buy and accumulate and dollar cost average on things because of this region down here. And certainly the worst case scenario that I shudder to even think about is if we dropped down into this level here. It would this would certainly set things back for some time. So I don't think that's going to happen, but you never know. You never know. But I think this is our area where we're going to want to be paying attention to. Certainly, I think if we came down here, it would come hard and strong, and we get a nice bounce out of that region, and that would be the profit opportunity in the short term, swing trades mostly. So with that, let's see, is there anything else worth looking at here? We have some of the altcoin perpetuals showing a little bit of life here. This would coincide with the Bitcoin dominance going lower, and if money does come back into this market here, pushing up some of the altcoins along with possibly Ethereum, and that's all consistent with what we were watching. In terms of what we might be watching, and as far as coins, specific coins here, not seeing a whole lot looking interesting, although I've got sort of a holding tank here of things I'm watching, and Fantom coin certainly looks interesting here. It remains to be seen if it can get up out of this prior downtrend and in this new uptrend. So this is why I've drawn this blue area here, but certainly it could still head lower because we want to make sure we also realize this is still in a downward trend channel. So until it breaks out of that, it's still in a downtrend. Okay, so I'm waiting and watching and hoping it breaks in a new uptrend. That's a possible one to watch. As well as Polygon MATIC, I have this sort of fancy. This is let's see. Let me come back to this. This is part of our. Let's try to undo this here. Why is that not letting me switch? This drew in part of our. This is really annoying here. Let me see, arrow, and I want to move the chart. Okay, there. This is something, it's a cup and handle pattern here. Just a little artwork there. This is the cup, this is the handle. Another breakout above the handle. This is a tried and true trading strategy that, typically pushes to the upside. So we do have a private group that we work with, and I believe we'll be mentioning that here on the channel here in the coming weeks to tell you a little bit more about that, in partnership with Max here and the channel. So keep an eye out for that. Just a little bit of a look on some of the things we're watching over there and giving recommendations on this. These are just too early to tell, and at this point we're just drawing lines in the sand here. So in terms of skimming down through anything that's moving and looking strong, don't see much of anything happening here as we come in out of the weekend. And so we'll have to keep an eye on things. And so Solana down $14 in the potential sort of liquidity zone or accumulation zone. But as we can see here, the cup and handle breakdown here, incomplete here, the breakdown here, the measured move for this would put us quite a bit lower, down in the $2.60 range, in, call it 260, right around $2.60 to $3 on Solana, and quite a bit down. However, if these projects in a bull market, if they can just recover back to where they were, that's possibly a 10,000, so I call it a 9,000% return to the highs if Solana can weather the storm here with FTX. So that's about all we have time to cover here today, and so keep an eye out for movements and things that are looking strong as markets are weak. So currently, I am looking at some altcoins and kind of keeping an eye on Dogecoin. Never thought I'd really say that, nothing against Doge, but in terms of the having real utility, that's something they have lacked. But let's just say and speculate that Elon, who does like Doge, makes this the payment rails of Twitter and gets back in the game to compete with PayPal. Wouldn't that be interesting? And I think that as he tries to and works toward making Twitter profitable to pay for the $44 billion he spent buying it, this would make a lot of sense, creating his own payment rails, and whether it's Doge or something else that they build internally, which would make more sense from a company standpoint. But in the initial phases, maybe it's Doge, who knows? So that might be a kind of a diversion, and then they release their own crypto. But that's a whole lot of work that he may not have the bandwidth to do. So at any rate, this is a interesting pattern here that if we do see a breakout above it, could put Doge up here. It's kind of a bull flag, and we'll kind of end with this, so that if it were to break out above the area here, depending on where you bought some, if it did come back down here, I would consider around the 34, 35 cents in our ERI TSI start to turn higher, because that would be a nice, 1,000% gain potentially. Not making recommendations here, but if the pattern plays out, the reason I wouldn't buy it here is, again, because of we've got our trend strength indicator and early reversal indicator flagging bearish. So this vertical line here is that ERI without the arrow, and then this red, the trend strength indicator turning red, indicates another oscillation down. So that's why it'd be worth keeping an eye on this, on another sort of swing down below on this next wave, and then possibly a bounce up out of that channel. So we will see, and we'll keep you posted. So hope you guys have a great week. And stay tuned for more information and to find out how to get access to this report, the Blood in the Streets for Crypto report, that will be going out here in the coming days. So keep an eye on that. Should land in your email box, and we'll drop a link here in the once it's ready. Okay. So thanks very much, and we will talk to you soon. Have a good week, everybody. Take care.